Hi
Yeah,
everyone, this is Samit from TalksOnGround. Hope you're well. So today I'm so thrilled to have this conversation with Harish. After a gap of almost 6 months, we couldn't get time from Harish. He's a senior expert in the field of finance and economics, and I'm so happy to have him here today. It's been a while since we've discussed anything from economic standpoint. So today we'll dig him a little bit on the economic front. So welcome to the show, Harish.
yeah. Hi, Samit. Good to be talking to you after a gap of 6 months. I think the world has changed a lot more in this time. So good to be back to Talks on Ground.
Thank you.
Yeah.
So I think we last spoke around the time around June or something, and that was the time when India was having its elections. Last November, there were elections in the US, and now there is a incumbent president in Donald Trump. Before we go on to that topic, I just wanted to touch base with you on what I think was a sharp decline in the stock market yesterday in the US. I think on the back of a rate cut. So I'm no expert in these things. So can you explain what's going on in the global economy and what's happening in the markets?
So yesterday was the final meeting of the Fed, uh, and it was expected that the interest rate would go down by 25 bips, which it did. But it was the comments from Powell which, in a lot of ways, created jittery amongst the investors because he said that next year, now, from the looks of it, we'll have two rate cuts because the market was expecting in 2025 around four rate cuts. So effectively, what he's saying is that the rate cut probability is down from four to two. Now, that's in an environment where already the interest costs are so high, the market was expecting similar rate cuts next year. And in a lot of ways, he has actually disappointed the market. I think that's one reason. The other, which I think is that it's end of the year, December, a lot of firms need to book profits. So I think my conspiracy theory is that, they said, okay, this is that volatility period where they can also book some profits, and yesterday was a good day. So typically in the last 2 weeks of December the market tends to correct, because if you see the S&P or the Nasdaq, they're up almost 25% from January. So it's a bit of a rate cut reaction and a bit of profit booking. I think that has happened.
Right. And I saw that today in the Indian market, I happened to see there was a 1% dip, which is not major. So there doesn't seem to be a major reaction in the Indian market. So that could be a good sign that people have not taken this as a major change in the sentiment or something.
Yes, I think the Indian market is becoming slightly unique in a lot of ways. Is that the weight of the foreign portfolio investments is going down over a period of time because of the domestic investors putting in a lot of money. So I think I read somewhere that uh, the domestic investors through these SIP plans and others put in 20,000 crores. So that's almost 2.5 billion a month. So if that keeps on going with the young people investing more in the stock markets, because the real estate market in India is slightly illiquid and difficult to enter into, you will see that the overall impact on the Indian market due to, say, US or European markets is going to go down, which is a good thing in my view.
Right. Now, before we go into other aspects, I want to ask for your view. Where is the global economy right now in terms of the fact that there's a new president coming? We know US is the largest economy in the world. Everything moves from the US in terms of financial markets, at least. And also, there could be some strategic changes when Donald Trump comes in, not just from the economic standpoint, but from the oil standpoint, the oil supplies. From what I understand, he's likely to accelerate the production of crude oil in the US, which can have a deflationary effect on the oil prices, which can then have a positive growth effect on emerging markets at least. Uh, Having said that, there are some concerns, and I want to bounce those off you, that if he was to impose a lot of tariffs, which he's talked about, he's talking about tariffs on India as well. India doesn't export much goods to the US, so I'm not sure what he's talking about. But even if he does, how will that impact the global economy, US economy, Indian economy? And another subtext is that you have already seen the first term of Trump from 2017 to 21. And this time, do you expect a similar kind of policy regime, or do you think he would have learned some lessons? A
Right.
lot to
So
unpack
that's
there.
yeah. So a lot of questions you have asked at one go. So I'll try to take them one by one. So Trump's stated policy is very inward looking. It's America first. It's tariffs. It's reduction of the government expenditure. It's border controls. It's a lot more focused on the domestic politics of the U.S. Now, politicians typically want to focus on what they want to focus, but it doesn't mean that other international issues are going to get ignored. So if you look at the impact of these uh, these efforts, tariffs. So the question is that how much inflationary the tariffs are going to be to the U.S. economy. I think that's the key question because they are coming out of a high inflation environment. So I would say that if you break up inflation into food inflation, energy inflation, and what you call the shelter inflation. So US is by and large food sufficient. So it has around 15% weightage on inflation. Uh, oil, oil has a 7% or petrol prices a 7% weightage. So I think they will increase the production. So the impact of the rise in petrol price is going to be minimal. And then you have uh, overall the food prices has a shelter has 35%. That's the residential cost, which we don't talk about in the US. So my sense is that tariffs will have an impact, but they will try to balance it out through reduced government expenditure. They'll try to balance it out through reduction in taxes and they will try to balance it out through not wasting money in wars and other places because ultimately if the policy is inward or domestically focused he has to deliver growth and my sense is that he's a businessman. He knows what are the challenges for businesses and that ease of doing business, government regulation. I think that's what his focus will be. So that helps in the US growth. So now the question is outside of US, what are the growth prospects we look at? So I divide the growth areas into US as a block, EU as a block, and Asia. So US, we has already spoken. I think they will continue to grow. Trump being a businessman, and for reasons I just stated. Uh, EU as a region of growth, I think that's where the problem is because if you look at the growth rates in the last 5 years, and if you look at projections for next few years, their growth rates are between 0 and 1%. They have lost their competitiveness uh, in respect of their input cost. Russia was the supplier of cheap gas. They are not buying from them. In terms of the export market, they were exporting to Russia and China. They are not able to do that. And third, an aging society. And fourth is such a generous welfare system they have. Now, when the society is aging, say 5 years from, 10 years from now, your welfare expenditure is going to go up and the contributors to taxes are going to go down. Unless you're very competitive and you can deliver growth, I think they are in for trouble in the long run. And that's why you can see that they are moving from left or the center of the left system to more towards the right wing. So I think EU has a growth problem in the next few years. And if you talk of Asia, I think Asia you can divide into China for the sheer size and the rest of the Asia, which will be India, Vietnam, Indonesia. I think China has a problem because effectively China is at war with EU and US. And why do I say war? Because there are restrictions on trade. These are all the tariffs which some are in place, and is going to increase them. Technology, there are restrictions now even on chips manufacturing in China by the US. Then you have capital controls, the ability of China to raise capital. And then I'm not even talking of the military war, which is on the sides. So China is at war now. They have to find new markets outside of EU and US. Maybe that's Africa, that's India, and the rest of the world. And then and apart from this, they have their own real estate problems, financial problems. But with all this, I think China will still grow between 4 and 5%. For their size, I think that's still a growth. And then you come to Asia. Asia is, I think, Vietnam continues to grow, Indonesia continues to grow, Thailand continues to grow. And then you have in India, India has its own stable, slow phases of growth. And I think we can talk India separately. But
Right.
India is not demonstrating extraordinary growth, which it needs for it to lift from low income to slightly middle income economy. So we will continue to grow, I think, 6 to 7% India, rest of Asia. But EU and US are where there'll be a bit of a challenge. And I think next year is going to be extremely interesting. But I'm very optimistic on the US side because of Trump.
So great. So let me dig you a little bit on India now. I guess all our viewers also want to hear that. So I want to know, and you made a very interesting and a very telling comment that India is not growing as fast as it needs to and as fast as it ought to and can, but it is still growing. What do you think are the structural deficiencies or maybe the policies that the government needs to have? So where is the lacune? Where do you think India is lagging behind?
Right. So let's say what are we optimistic about India? So I think the optimism comes from the fact that now the elections have concluded. So we'll have political stability at the center for another 5 years. So that means it's 15 years of a single government. That's one. Second is that directionally, this government is in the right direction on the economic policies. They may not be doing as much as we like, but directionally they are doing that. Third is at the top, this government is largely corruption free. We haven't seen any case come to the court in the last 10 years, though there's a bit of a Adani noise, but that's a noise, and there's nothing that has been proved. So I think these are the good things. But if you really look at it, these things have been existing for last 10 years. What have these things delivered in last 10 years? So it is a growth rate of an average 6 to 7%. Now, if I compare that to 2004 to 14, which the Congress government, we said that the prime minister was not strong, it was a minority government, corruption, inflation, they also delivered the same growth rate. So, what is the substantially the difference between this government? So my sense is that these guys play for long run, but because they think they're playing for long run, they're not in a hurry to do things. So if I look back and ask myself, okay, Harish, what are the 5 big projects we have done in last 10 years, which I, as an Indian, I'm going to be proud of? What would that be?
Maybe the GST the demonetization, the Jan Dhan Yojana, the highway projects, and maybe some tax
Right, right,
rationalization.
right. So, all right. So in 10 years,
Right.
we have to start thinking. I can't tell quickly. And when we talk of country, these have to be really a visible projects, not not government policies like GST, tax rationalization. These have to be big scale infrastructure projects which are visible to the people. Massive airport, massive port, expressways. So, what have we seen in the last 10 years? I think they are trying to build a base through tax structures, through UPI, through trying to run a corruption free government, which has resulted in actually going in the right direction, but not at the right speed. And where have we missed? I think even though this has been a strong government in 10 years, but the opposition is very strong in India. And what and why I say strong is because if you look at really the big ticket reforms, agricultural reforms, they could not get through. Land acquisition, they could not get through. PSU privatization, they could not get through. Judicial reforms, they could not get through. So if you really look for India to grow in the next 5 years, we have to grow between 8 and 10%. They have to invest a lot more money. If it means a higher fiscal deficit for 5 years, I think that's the need of the hour. That's my view.
That's exactly where you guys will come in and say, oh, the fiscal deficit has gone up. Nirmala Sitharaman is breaking the bank, and the debt is out of control. Uh, but I do hear what you're saying, and I think if you looked at India as a balance sheet, then they have been so focused on reducing liabilities or not adding to the liabilities that the asset creation has reduced, or rather, the speed of asset creation is not what it ought to be. Is that a fair way to put it?
So I think yes, that's a fair argument, and I would say that in my hypothetical and speculative mind, at least 2% of India's growth is taken away by politics. And
That's
why
a
I would
great.
say that, and why I would say that is again, I say the opposition is so strong. They do not allow government to do big reforms. Yes, the government has done good things like UPI, delivery of services, infrastructure. That is good. But what they have not been able to do is to set up these centers of manufacturing. You need to have these 4 or 5 massive clusters of manufacturing, whether you want to have them spread evenly or in at least 2 or 3, whether BJP rule states or opposition rule states, where the land has to be given free, incentives have to be given so that you can set up industries at a scale. Now, if you don't do that, you will end up with 6 to 7% of growth rate.
So tell me one thing. I mean, I'm just thinking aloud. I mean, just as anecdotal evidence, during the Manmohan Singh years or the Rahul Gandhi, Sonia Gandhi years, there was a lot of risk taking and a lot of projects that the private sector took up. And of course, a lot of them were bad debt and bad loans that the government then had to recapitalize banks and so on. But at the same time, there was a what's famously called in Indian pink papers is animal spirits were there. So do you think that the hidden and the covert and the overt anti-corruption drive has taken away the animal spirits of the private industry?
So I think that's a very nice way to say that the animal spirits have been suppressed or they are depressed. I think that's a very fair comment. The both challenge and the opportunity is that when you move from a disorganized state of economy to a more organized, digitally driven, everybody becomes more accountable. What that means for a bank is that now everything is in a digital platform. So when they were 15 years back, they were able to give easy loans. Now somebody at the back end can check what is the process. So a lot more process and systems have been put in place. Now, what that means is that that risk taking by the lenders itself is not going to happen. Now, that was a unregulated risk taking. That okay, I know this banker, I can get my 1,000 crores loan. Now, the world has moved on, we have moved on, and I think for good that the public sector banks are more organized now. And the biggest indicator of that is that the sum total profits of public sector banks compared to today. And if you compare with that era, there were some total was a loss. Whereas today you are looking at maybe a profit of maybe 2 lakh crores. So they are getting organized. They are getting to follow the processes. And when that happens, things move at a slower pace. We have not achieved the efficiency in that process because the government has been focuses on setting up the process. And I think to me, that's good because the financial system has to be stable and it has to have a lot more credibility.
I think there's an argument made repeatedly that the Indian capital markets are not deep enough, and therefore India is more of an equity market compared to, say, China. Long back, I had read some book by some Chinese. Don't ask me to name him. And he talked a lot about the shadow banking system in China, which is really unorganized sector, which is not, even though China has a one party rule and you know how things can be really regimented. But the fact is, there is a lot of economic freedom out there. So political freedoms are not there at all. But from an economic freedom standpoint, there is a lot of economic freedom. So you would go to a shadow bank. Shadow bank doesn't mean like a bank in the shadow, but it means a small lender who has got
Right.
loans from, say, Bank of China or somebody at X rate, and he adds a 2% on that and gives out without really checking much on the credit worthiness. And that is what supposedly grew China. I mean, that was like the base for Chinese growth in the early 2000s, late 90s, up to 2010, until Xi Jinping came along and destroyed everything, I guess. I mean, that's my understanding. Uh, you can respond to that.
So I think the point you are making is that it is it much easier to borrow in China versus in a more organized banking system in India? The answer will be in any system where the rules are relatively flexible, where the levers are dependent on the people, it will always be easy. But uh, having said that, I don't know much about the Chinese banking system. I think at least, I visit India, I get some sense of the banking. I travel to US, I get some sense of the banking. So I think in India, we are still in that level two of the banking from disorganized to organized, but still the level of the banking for the corporate sector is not so organized is not the right word, but not efficient because they have to be able to lend money quickly, recover money quickly if somebody doesn't pay you back. So that lending is, I would say, is easy. The more difficult part is the recovery of the loans. Now, for that, the government has come out with codes, IBC, but still that debt piece of the market depends on the courts. It depends on the contracts that people honor contracts. If I promise to give you my house in view of a loan, you should be able to take that take the home quickly if I don't pay you. Now, I think the contract system, the court system in India is quite archaic, and that is where the whole of EU or the US stays ahead. That it's very easy to lend money, and in case the lending is not right, able to recover the money.
Right.
And that's where,
With
sorry, that's where I come to the judicial reforms, that these reforms are really required if you have to achieve economic growth.
Can I push back on that? I'll give you just one example of how something can look so good from the outside, but when you scratch the surface, it's very different. For instance, the UPI system.
All right.
Now, that's supposed to be um, like enabling a lot of digitization and democratize, uh, democratization of the payment system. But at the same time, um, it reduces cost. It causes Visa and MasterCard to be really angry with India, and they go running to the president of the US to pressure India. But the end result is that the UPI is now being ridden by American companies like Google Pay, and Paytm was owned by the Chinese. And then you have Phone Pay, which is again Walmart, right? Through Flipkart.
Yeah.
So your data is again with the US. So where have you actually uh, okay, I mean, you own the layer which is kind of causing that processing that payment, but in reality, your data is still with the Americans, if I may.
Right. So I think the key point, or we have to think of what is the key risk I'm addressing here. The key risk is that through the UPI, you have your own financial system of payments versus an international system like SWIFT, where US can just turn the button off and your whole international system of payments will stop.
Right. And that brings us to the important point of de-dollarization. So there is this whole statement that Donald Trump made that, dare you not touch the dollar as a reserve currency. In brackets, he didn't mention the trading currency,
Right.
as in US dollar as a trading currency. And he told the BRICS that, you bring it and I'll put 100%, 200% tariffs. Um, so do you think, given all of these factors, I know we dug a little bit on the India side, but you talked about the EU being sluggish and they have structural issues, they have demographic issues, political issues, military issues, and so on. The US is not in itself in a very great place, politically, economically, and so on. But do you think BRICS can or will be able to push through some sort of a system wherein swift sanctions or swift suddenly seizing control of your $6 billion of dollar reserves, that threat goes away?
So, so I think what we are seeing, or what we call de-dollarization, really started some time back. The question is, what are the indicators of this de-dollarization process? I think the first indicator is the central banks buying more gold. Because if you really see this year, the gold price has gone up significantly. And who's buying gold? It's the central banks of Russia, China, India, Turkey, Nigeria, Iraq. These are the people. Now, why is India buying? This year we bought, I think, 27 tons of gold. Why are we buying? Because the threat of US sanctions, trade and currency is real now, post the Ukraine war. So that correction is going to happen, and that is not in control of Trump. He can threat, he can put 100% tariff. Doesn't mean that we will still keep dollar as a currency in our portfolio? Possibly yes. But does it mean that I will stop buying gold? The answer is no. What is the other indicator? The other indicator is that India UAE doing trade in rupee and dirhams. What is the other indicator? Russia and India and rupee ruble, which has been there for long. What is the other indicator? Russia and China. So I think you will have these country to country arrangements now kicking in, which helps the two countries. And US will threat. There will be action, whether it's trade, it's currency, it's capital, it's technology. But ultimately, if you're part of the global trade, there's only so much you will do because beyond a point, it hurts you.
Right.
Right.
So, from here on, I mean, given all the facts that you have at your disposal, uh, what do you think will, how can this play out? As in, year on a year, countries keep purchasing gold. So the dollar as a reserve currency, it's the percentage keeps going down. I think it's in the late 40s right now, if I am not mistaken. As in, if all countries combined have $100 billion of reserves, then around 40 to 45, 46% of that is in US dollar denomination. So how fast do you think it goes down to 25? And what is the impact of that shift?
Yes. So I think the issue is not just of holding dollars. You have countries like Japan, China, who have a lot of export earnings. Now, those export earnings need to be invested. Where are they invested? They're invested in the US Treasury because the money is safe and they get some return. And let's say, hypothetically, tomorrow, China decides that it's 1 trillion, it's not going to place in US Treasury. Where will that money sit? Where will they invest? So I think what we are witnessing now is actually a transformation of change of world order. How trade will happen, how capital flows will happen. And the key reason, in my view, is the emergence of Asia as an economic powerhouse. And if you have to single out, it is going to be India and China. So there's a recalibration of trade between the older players, which is EU and US, where because of their strong economy, strong currency, they had a lot of advantage on the trade terms, and that helped their economies. Now that is changing. You will see a lot more trade flows originating from the Asian countries, one, because of population growth, and two is both China and India are very, I would say, economically progress mindset countries. They being communist, India was largely a socialist or a leftist, but we have also turned towards capitalism.
Right. So that's great. So, Harish, if I was to ask you to make a projection and also to, um, if you were sitting in the finance ministry and sitting across the table with Mrs. Nirmala Sitaraman, and you were told, okay, you have 2 minutes and you can give five suggestions, or maybe just one suggestion, what will that be, and why would you make that?
So I have 2 minutes with the finance minister, and in
Yeah,
2 minutes, I have to give her five suggestions that
you can give two. I
I
mean,
can give it to you.
you take 10 minutes, okay?
Okay. Okay. All right. So you're giving me more flexibility. So I think if I were to look at uh, the growth centers of the world and see why they developed quickly, let's say China in the last 30 years, you will have to invest at a scale at which you have not invested on the infrastructure. Now, that means that you will have to allocate disproportionate share of funds into ports, into airports, into roads, and into generation of electricity and anything to do with infrastructure. What that means is that if I see the current administration in India, they are so much focused on distribution of wealth to the poor, to the direct benefits transfer. Look, I don't have a problem with that, but the point is, where can that money be invested such that the country grows? Right now, the thesis is that we should distribute more money because that helps to win elections. So in that way, the BJP is a lot more leftist or a socialist government than the Congress. And coming back to your question is, where do I invest money? Okay. Give me $100 billion for ports, $100 billion for expressways, $100 billion for airports, and give me permissions, and all that money has to be spent in the next 5 years.
So let's say I'm
Yeah,
Nirmala Sitharaman. So
yeah,
I'm going to ask you a question.
yeah,
So our trade is not growing. We are growing at a snail's pace. What will all those ports do? We are international visitors are not going up. We are the ones going out.
right.
So what will be the airports being used for? I mean, anyways, we are building quite a few, and expressways we are already building. We have a certain amount of capacity. In terms of contractors, skilled people, this that. So okay, I'll give you 10 billion. I can't give 100.
So I think that's a very valid question because through through this money which I'm asking for, I'm removing inefficiency. I'm bringing efficiency. If I'm asking for a port, money for port, all I'm saying is that because of the scale, my logistics cost is going to go down. Goods are going to move a lot more quickly. And if you have to improve your margins in the business, your cost will have to go down. If you have to compete with the bigger players, international players, your cost has to go down. Now, you don't want to do that. I understand that. I totally understand because you want to spend money on Ghar Se Nal Yojana and all those social aspects which I respect. But ultimately, I need foreign capital in the country. I need foreign manufacturing in my country. I need foreign technology. I need foreign skills. Now, if I don't have those basics in place, why would anybody come to India? I think India is at a very good strategic advantage where a lot of American suppliers are looking at China plus one. Now, where will they move their factories to? They will move the factories to geographies where there are roads, there's electricity, from where they produce, they can export, for which they need a port, for which they need an airport, for which they need, you know, good infrastructure, people can live. So I think that this is a once in a lifetime opportunity for India because of manufacturing being moved away from China. The question is how well we can take advantage. If I'm not finance minister, if I'm prime minister, my wish list will be okay. It's difficult to run the country. I have to win elections. I have to identify 3 or 4 states where I'm going to invite these manufacturing companies, give land free, give them tax incentives, make roads for them to export, ports for them. So you have to give an environment and at a scale. You don't have to do in every part of India. So maybe in 3 or 4 states, make massive investments. But the more I think of this, what reminds me is the politics in India. And that was the reason why I said that the politics, I think, takes 1 to 2% of your uh, growth rate away.
And if you think of the farmer
Yeah,
protests and the fact that all those laws that you mentioned haven't been passed
yeah,
either because the government hasn't even presented them or they have passed them and taken them back. So I see where you're going with that. It probably is not just 1-2%, but also the trajectory of the growth itself.
right, right.
Because the agriculture reform would have changed the structure of the economy itself. So I see that, and uh, I really think two points have really stood out for me today. One is this political cost that you mentioned. The other thing you mentioned was where will a Japan or a China invest their $1 trillion surplus? I think these two aspects are pretty scary because um, Donald Trump is basically kind of saying in his speeches when he's saying make America great again and make it the manufacturing power, then in a way he's kind of moving America away from its current strategy, which it has been going on for maybe 50 years. So in a way, he's pushing de-dollarization himself when he says bring the jobs back. So it's a contradiction in itself. But it's a scary scenario because internationally, if China did what you just suggested, we are in for some tectonic shifts in the global order and perhaps the way the economies run, and the way things get done. But this was great. Any final thoughts uh, so that we conclude the discussion today?
So I think uh, two key points I would like to bring in. And again, I would say that uh, these are the advantages to India, which we have to be smart enough to be taking advantage of. So capital and technology. So if you look at US as a bloc, EU as a bloc, these are extremely wealthy economies and they have a lot of capital. And when I say capital, they have always been investing internationally, either US into Europe, Europe into US, US into China, uh, into Japan. And now we are looking at a situation where we are saying that EU will not be growing or it will be growing less than 1%. So there's a lot of US capital not going into EU. US is actually not investing much in China, right? China is not able to invest in US and EU. So you are talking about a lot of floating capital, both equity and debt. Where will that go? Now that will get into economies which are relatively stable, relatively US or Anglo-Saxon model friendly, and which are not threat to either the China or the US. So I think India has that unique advantage of being able to attract both debt and equity capital. That's one. And the other is the technology. I think that's where the Indian minds or the brains have to kick in, that we have fantastic software engineers being exported, softwares being exported. To what extent in-house we are developing technology? Because our dependence on technology platforms in the long run is not sustainable. Just as you have to move away from dollars, you will have to find ways to have your own technology platforms once you achieve a certain scale. And I think we are at a stage where now the government has to pump money into these projects also.
Right. One last comment I wanted to make
Yeah,
on that capital coming in. Indian bonds were included in the JP Morgan index and so on.
index, yeah.
I think it's almost been a year or so. Uh, um, but I haven't seen anything substantial happening. In fact, the growth rate from July to September was low because the government spending was low, apart from a very heavy monsoon and so on. So, if the government is receiving so much of foreign capital uh, in the debt route directly into their bonds, they should be able to spend more, especially when private capital is not investing as much. So that's been a bit of a disappointment because I think the expectation was for 25 to 30 billion dollars a year, and it has already touched 2.5 or something per month, which is, which is heading in the right direction. So I don't know what else needs to be done, but I guess we need to come back and do a India specific deep dive as a part two of this discussion. But today we took a bit of a roundup of the global economy. So thank you so much, Harish. It was great, great insights and great talking to you. Thank you. And all the viewers, please subscribe, like, and share this video. And do send your comments for, in terms of what else we need to discuss from the economic standpoint. Hope you liked it. Good night.
Okay, thank you very much, Samit. Bye.